Welcome, boys. Riley is buggering off in Asia. I don't know what that may imply worse things than what he's really doing. But he's the only kid that you send him to work in Asia, and he takes his golf clubs.
I almost killed him. I swear to God, I almost killed him. I'm like, listen, Riley, I need somebody to be in Asia for the next 2 weeks, and you might be able to play golf once, maybe twice, right? Because Straza wanted to play golf in Vietnam and then maybe in Japan or something like that. Kid brings his fucking golf clubs. I could have killed him. I'm like, Riley, you're literally there to carry things, and now you're bringing your fucking golf clubs to 8 countries in Asia? Like, what's the matter with you, bro?
He might never come back. He's like playing all thrill. Like he's playing thrill.
He's channeling. It's like he's acting as if he's my son, Max. Well, welcome, everybody. We've got 6 pound overweight from a recent vacation, JC Peretz. And we have the consummate professional, degenerate, faster eater, Phil Perlman, who is living proof that no matter how good a care you take of yourself, turkey neck creeps in. And mine is, Phil, let me see yours. Stretch
Is that a turkey neck? I thought it was just veins, but I don't know.
Yeah, that's a corroded artery, double artery there. Speaking of corroded arteries, let's talk about the short sellers and JC's fake tan. What is that, a real tan, JC, or is that fake?
Listen, man, I was at the beach and I'm Cuban, bro. I tan nicely. So do you, Lindsay. Perlman looks like he needs a little more sun, but
Perlman looks literally like a ghost. Like the Mission Impossible ghost. And
I had a tan like 2 weeks ago. What happened to my tan? What's going on with this? I gotta go
JC's face looks like a butterball turkey. Okay, so let's get to the charts. I think shout out to all of us for being bullish the last, I don't know.
We've been bullish this whole show. It's been like a half a year already. And we've been bullish. So
we've been bullish.
Everybody.
And there's so much screaming on the internet. I think we'll start with just JC ripping through charts without rise. So, JC, where do you want to start? I want to make sure we cover interest rates, crypto, no Dogecoin, and we're going to Coinbase, which we called here perfectly. Let's talk about Meta. All right, start it.
All right, so listen, I am keeping it real. I know everybody wants to hear about DraftKings and Bitcoin and MicroStrategies and all that stuff, but I like to keep it real around here, and this is really what's on my mind, right? You guys want me to tell you what? Look at Lindsay. What is he doing? You're on mute, first of all.
I was just
kidding. Just kidding. The Adderall just kicked in.
This guy's crazy over there.
Noon. On the West Coast, and
pay no attention to the crazy man at the bottom of your screen. Listen,
Adderall kicked in.
Let me ask you guys. You guys are my friends. Let me ask you this: do you want me to tell you what you want to hear, or do you want me to tell you what I'm thinking?
I want. Let's all go through what our thinking. This was the chart that blew my mind. Everybody's leaning. All the degenerate dummies are leaning. And there's 2 types of degenerates. The degenerates I love, and the degenerates that are degenerates. And the degenerates, and I include Chamath and All In Podcasts, and these people are living 2 lives. They want to be right about everything. So they're saying the demise of the U.S. They're cheering on the demise of the U.S. dollar.
I don't know who you're hating on, but why? What does that have to do with commercial hedgers in the 10-year futures?
Talk about it. The rates. Everybody's betting on the rates continuing to go up right here.
This comes from the Commitment to Traders report published by the CFTC. Every week, I encourage you guys to go and go see that report. I encourage you. Go find it. If you can't find it, email me and I'll send you a link to it. Go find it. It is the worst thing you've ever seen in your entire life. It is a mess. The U.S. government wants to make sure you don't understand what the hell's going on in the commodities market. And if you don't believe me, just go see for yourself. It's worse than you think, by the way. So that's number 1. Number 2, we do a really, really good job here of aggregating all of this data on the positioning, because once you are trading more than a certain amount, you have to disclose to the government who you are. Are you a commercial hedger? Are you a corn farmer that is trading corn futures for business purposes? Or are you a large speculator like a hedge fund or a pension fund or some high net worth? Who are you? And historically, particularly at extremes, those commercial hedgers, the smart money, those that know, tend to be very right. Particularly at extremes, when the other side of the trade is the large speculators. It's more than just hedge funds, but for our purposes, think of it as hedge fund. It's other large institutions as well. But for the purposes of this conversation, just assume that they're hedge funds. That's good enough, right? Close enough. The point is that at extremes, that's the dumb money. They are doing the opposite of what you should be doing. Kind of like the sell side analyst community, how they got the first half completely wrong. They thought the market was going to go down at consensus, and we had the best start to the year ever. And now their back half of the year estimates and targets are the most bearish of all time, actually. So what you're seeing in the Wall Street sell side and what you're seeing in the positioning of their clients, which are these hedge funds and large institutions, are similarly positioned to an extreme. In my opinion, they are historically, I've done the math, they are historically very wrong at turning points. So if they are the most confident that interest rates are going to go up and the end of this 40-year bull market in bonds is over, they are betting more aggressively than ever that that's the case.
Yeah.
And when they're this aggressive, taking the other side tends to be the wise choice. So what does that mean? That means lower rates. And is that why these growth stocks have absolutely been ripping? Because they're already pricing in those lower rates that are coming in the future? That's what I'm thinking about currently.
Bill?
And so there's this old saw on Wall Street that the bond market is right and the stock market is wrong, and you have to listen to the bond market.
And we know from experience that it's not true. We know.
Yes, exactly. You're making a counter argument to that, which I love, because nobody knows. I mean, the bond market's not always right. It's just like trying to be more sophisticated or whatever. It's always been a stupid argument. And I think in this case, yes, everybody's looking. The one thing I notice is I just notice the beginning. It's amazing. We've been in a bull market. I mean, the NASDAQ's up over 40% this year. And only now are we seeing the beginning of FOMO. And only now are we beginning to see people writhing in pain who are not long enough or who have been bearish and have puts. And that is a process that takes a while. That is not an event that happens in a moment. That is a process. People are slow to take in new information that goes against their beliefs. They only do it regrettably and kicking and screaming. And so that is a process that takes a long time. FOMO plays out over a long period of time. I'm talking about, growth stocks as well, saying that could be plenty of room to run.
We're all in agreement here then. So this and the US dollar chart, I don't know, I saw earlier from Straz, or if you can pull up. But what's interesting here, JC, on both is now the US dollar is kind of accelerating finally down, right? Like there's all this talk the end of the dollar and nothing happened for a year or 6 months. Now we're starting to see. I think that was an interesting comment you made, JC, about like the government just confusing everything, making it impossible for you to see what's going on. So at times like that, you've got to go with people who are doing the work like you're doing. And these two charts really, probably people would love us to talk about Bitcoin and Meta and all the things we've been talking about. But I think you really have these two charts say it all right now. So far, the stocks like this idea that the dollar is getting weaker so far. And so far, it feels like the market has priced in that rates were going to be up here and stay up here for a longer period of time. And now that everybody's betting on rates staying up a little bit of time, you may finally see rates slow down. The question is what happens if the Fed surprises and just cuts rates, or if rates stop going up? Have stocks already factored all in, and then will that be a short-term turn? That's kind of where I'm saying, because there's so much chasing going on. There's a lot of great looking charts, but we were talking about Coinbase in the high 60s and 70. It's 107. And now people are excited. You talked about a target of 100. We ripped through it, and people are so bullish on crypto after the move has been made. So I'm wary of how good it is, because I don't think it's that good. So I think you could be in for a bit of a rug pull, knowing that these turns are happening. But I think medium term and long term, the market trends are speaking, and I'm all for bubbles.
You want to see the Bitcoin?
Yeah.
So this is a really interesting sort of scenario what you're talking about here in a rug pull, because when you look at the width of the Bollinger Bands, this is a measure of volatility. Mm-hmm. What we know about asset prices is that asset prices trend. We know it's not random. We have the data. Asset prices trend. Volatility, on the other hand, mean reverts. We know that. We also have the math. So if you want to be the house, if you want to have the probabilities of success on your side, you want to be a trend follower when it comes to price, right? And you want to be a mean reverter when it comes to volatility. Well, volatility right now is so contract. So from volatility contraction comes volatility expansion. From volatility expansion comes contraction. We have contracted to the extent where volatility is so low, we've only seen this a handful of times in history. And again, from volatility contraction comes expansion. So my bet, if math means anything to you, and it does to me, we are betting on a high volatility event on the horizon practically any day now. If is what it is, and there's a lot, and we're at a critical
but didn't
level.
We see it yesterday with XR? I mean, we weren't going to do the show this week, but didn't we see it in the show must go? Didn't we see it in Ripple and Think going on CNBC every minute, and all the people dunking on the crypto bears and Coinbase hitting 107, and everybody, all the Dems now attacking Gensler too. Did we just see the explosion in vol? And was that I'm bullish medium term and long term, because can't
the
battle
answer is
Larry
we have
Fink.
not. The answer is we have not seen an explosion in volatility. Right.
If you were to guess, JC, you're guessing that it's going to be beneficial to Bitcoin, this volatility explosion, or no?
I think so, because when you look at some of the other assets, it's a weight of the evidence thing. I don't know, obviously. So you want to kind of look around at Bitcoin's brothers and sisters and see what it's doing. And you look at MicroStrategy, already broke out.
These are some levels, really weird brothers and sisters, by the way.
Fine.
No, I'm saying they are, and that's how weird the industry is. The brother is a psycho. But
I mean, if you're looking at a gold stock,
Bitcoin's a crazy asset, man. It's an it's electronic asset. It's only been around for 12, 15 years or whatever.
I'm not picking on Bitcoin, because it's the same thing in gold, for example. If you're wondering whether your gold stocks are going to go up, go and see what the other ones are doing. Are they going up too? Are they breaking out from similar consolidations? If you want to buy Caterpillar, maybe take a look at what John Deere and Honeywell are doing. Are they also moving in that? You know what I'm saying? You want to look at its surroundings, its crew, if you will, right? It's sort of how I look at it. Coinbase already breaking out from those levels. Mara continues to rip. And you know what I find really, really interesting there, Mr. Lean Zone, I think you will too, and Pearl Dog, is that the MicroStrategies, the Mara, Coinbase, all of these have done very, very well, despite Bitcoin not being able to break out yet. Bitcoin hasn't even broken out yet above 31,000 and be able to stick it. Still hasn't been able to do that. I'm looking at it right now, just above 30,000, as a matter of fact. Hasn't been able to stick it. So I think that the other ones are suggesting that Bitcoin is eventually going to come. I guess we'll see. I got to see it.
Again, this is not just one. I mean, the news about XRP and everybody relisting XRP, Ripple, is that maybe Bitcoin isn't the only one anymore, and it's bad for Bitcoin and good for shitcoin. So there's just a lot going on in the space, but I think what's important is what you said about the volatility. Great investors ride trends in price, and at extremes in the vol make a move around volatility. And Phil, you were an options trader for a long time around options hedge funds. So what's your take on this chart right here?
My take here is that the resilience in Bitcoin, I mean, if you go back to the argument that this is not a real asset, this is a made up asset, this has not been around for a very long time, and it's really just, there's zero fundamentals to it, and it's the bearish zero argument. The fact that we have seen this thing survive near-death experiences on multiple occasions. It was the end of the world a year ago. 4 years ago, it got down to 90% correction. We've had these massive corrections over time, and every single time It's managed to bounce back and even just put itself into, go back to that long-term chart, JC, that long-term log chart. I mean, and even just put itself into this situation again, where it's come off a long-term low that is, equal to the high of the last cycle, or equal, higher than the low of the last cycle. Just that it's in that position, to me, is just a sign of resilience that it has now shown 4 or 5 or even 6 times over the course of its brief life. Brief life. It's just incredible to me.
Good takes, guys. I want to move on to, I don't know, JC, if you had this. I want to do a few more charts and move on. I also wanted to talk about, go ahead, JC, take the final word on this.
Well, I wanted to just kind of go back and there's been a really strong negative correlation between the dollar.
Yeah. We were talking about the dollar, which is
and risk assets in general. So stocks and cryptocurrencies have tended to do very, very well over the past 6-7 years when the dollar is weak. What you've seen as with the dollar collapsing over the last week is not anything new. It's just more of the same. So if we know that and you're looking for crypto assets and you're looking to buy stocks, what you're really looking for, in my opinion, is a lower dollar. When you look at the dollar relative to emerging market currencies, you're sort of going even further out on that risk curve, that currency risk curve, where when you're looking at the euro making new highs, that's a big component of the dollar index. Well, that's really important. Obviously, seeing what emerging market currencies are doing as well is really informative. And emerging market currencies are making new 52-week highs. So some people talk about the dollar index like, oh, it's only the euro. Yeah, maybe it might be 60% euro, but that doesn't change the fact that the majority of currencies around the world are strengthening versus the dollar. Yes, the US dollar index is a lot of euro, 60% euro. But again, while that is true, all the other currencies around the world, or many of them, are really strengthening, particularly emerging markets. So I think that could be finally emerging markets can have a turn, because outside the United States, it's been developed markets, it's been Euro, it's been Japan. Has not been emerging markets, at least not yet. So we'll see, except India, but India is like Notre Dame. It's like its own, it doesn't know if it's in the ACC. It is, but it's not, Russia also has been an outlier. It's been weak against the dollar, despite the CEW and DXY.
Mm-hmm. I'm looking, JC, I bought some ILF just for myself to fart around, pre-running this trade with the weak dollar. Does it look okay like Latin America, or is it's just a tough market, do you think? I don't know. I'm just farting around with LATAM here.
Well, Mexico's shown a lot of strength already, right? So that's not anything new. You look at, Brazil is the big one, right? Because you can even argue that Mexico is like not even, you can argue Mexico's not even Latin America, right? It's kind of like its own thing. So here's a chart of the Brazil ETF. Right.
So nothing really. Okay. So
hold on. Sorry. Okay. Here. So it's making new year-to-date highs, and Latin America is Brazil's a big component of that ILF 40, the Latin America ETF. So it's going to look exactly the same. Okay. So if you're buying ILF, you're buying Brazil is what you're doing. So just keep that in mind.
Yeah. So I think another thing is, like, if we're going to talk about what's happening with potentially, you called the end of the bear market a year ago, but like now as the bull market kind of gets some new legs, possibly from this weaker US dollar and from a topping of potential interest rates based on position sizing, a whole new generation is going to learn, right? They got bearish at the wrong time, and now it's hard to get bullish. That's what we're here to help them with. One thing I'm seeing is how this plays out. We predicted the Coinbase thing. Now I talked about Hood a couple of weeks ago with you guys, and as much as I'm not in agreement, as an early investor and don't love their strategy, but I was saying it looks like it's going to go much higher. It's gone from when we talked about it a couple of weeks ago from 10.5 to like 12.5. Can you pull that up, JC? Because I think it's kind of a leading indicator how this next generation is easing back into the market, right? Like Robinhood left themselves up to be beat because of execution and brand, and here we are, and they didn't die, and they've got a ton of capital. Sorry. Can you pull it up, JC?
Yeah, I'm putting it up right now.
I think it talks to what we all were talking about earlier, is that if you don't know, you don't know. You've got to put in the hours like you guys have done for 25 years in the markets to really understand how to look top down. But from a bottoms up, how are the degenerates thinking, right? Well, they're showing themselves on Coinbase. They're showing themselves on Robinhood. And I think the Robinhood chart's really interesting because of how young people think. So if we can pull it up, it'd be interesting to see. So we're not there yet, but it's creeping to a point kind of like Coinbase. I don't, where if the degen economy gets this second wind, right? And the way I look at the degenerate economy here, guys, which relates to Robinhood here.
Just keep in mind, relative, when you look at Robinhood relative to Coinbase, Robinhood's down near 52-week lows relative to Coinbase. So dramatic outperformance out of Coin. Just keep that in mind.
That's what I'm saying. So again, like, I don't know what this means, but we did talk about a move coming in it, and now it's up against this major resistance. And what I'm saying is, if this is a stock to watch here, because they haven't executed that well, and we'll really get a feel for the mood of this like younger generation and how underinvested they are and how excited they get with this move. Because Coinbase is much more institutionally held. There's a lot more speculation around leverage, around cryptos and how to play that industry. Robinhood's still a very small business, but this pseudonymous generation is very important. And I got a pitch recently about pseudonymous but verified. I think this new generation really likes to be pseudonymous as it relates to investing, but verified becomes very important too, because there's so much noise. So, and the idea of catalyst investing. Well, you, JC, can take apart the commodity and the hedgers and all this. This next generation hasn't even had the time from their iPhone to understand all this, but they are catalyst investors, right? They're inundated with news. They have calendars they can sync to daily events, and they can trade for free. So the degenerate economy, which I've been talking about since we started, is really still in full gear, and it may stretch itself back into the Robinhoods of the world, not just the gambling. And then the other thing I was going to talk about is sports. Is this sports? The insanity of what people are paying for sports is one thing, but that is also a measure of how much money is coming into sports and new sports and supply. And DraftKings, made another kind of big high this week.
I just want to touch on what you're saying right now, and from a psychological point of view, and from this sort of slow reaction point of view. Like, bull markets don't happen in a day, and people don't change their sentiment in a day. This is a very slow turning thing. People are only very slow to change their minds about everything. About anything, especially things they believe or things they felt deeply. And so when you have a situation with Hood specifically, where there was such a wonderful retail, movement, and it got really frothy, and it was a bubble, and they all got burned. And so now that cohort coming back into the market, that younger cohort coming back into the market, is not going to happen overnight. It's not going to happen in 7 months with the NASDAQ going up 40-some%. It's going to take a while. They've been burned, and their ability to come back in and start taking risk again and start thinking, hey, I can make money again, it's going to take a while. So I think that your point, both of your guys' point, are really important ones. Howard to begin watching this, and JC to keep an eye on where it's at, that it hasn't broken out yet, and that it is still underperforming. Because if you see this thing start to come back, that is going to be a really nice reflection of animal spirits, and it's going to be a really nice reflection of that timid, once burnt, twice shy, younger cohort to come back into the market.
So much like 1999, 2000, which we remember, JC, maybe not as much, but it took 5 years. Well, here it's only taken 18 months, let's say, and Robinhood got a free, because of so much capital they raised and because of how silly their strategy was, going to China, going all over the world, not focusing on the US, not focusing on wallet share. They're getting a second chance here, and they're getting a second chance with a much leaner cap because of technology and AI. They're going to be attacking this time, assuming they can execute with a much leaner company than E-Trade did the second time around, or Morgan Stanley did when they had to do. So you can see the difference, not just in Robinhood versus Coinbase, but you can also see the difference in DraftKings versus Penn. So when we think about gambling, we think of Davey Barstool. And if we go look at a Penn chart versus DraftKings, it's kind of like Hood, and it's even worse than the Hood Coinbase thing, because Davey Barstool has been, basically a fraud. Like, it was all a joke. Like, you have to have great product to come back now in 2023, right? And Coinbase is back because they're the best, cleanest product in the US market. And Robinhood might be on the verge of coming back because they're still the one go-to mobile application. But if we look at DraftKings versus Penn, it's a joke. Penn's product sucks. He's all bluster. He's a yelling, fool. And look at DraftKings versus Penn, and DraftKings has more than doubled, and Penn's still hanging around its lows. So you have to there is huge dispersion.
Yeah, but I think it also has a lot to do with the fact that they paid all that money for a company that that all those guys are broke, right? Like the Stoolies or whatever.
No, but I'm just saying they're different. Like, you can bet on.
Yeah, but that's just not the ideal audience. Like, they run out of money. They're tapped out. So it's just the wrong audience. You want a higher echelon. But you know what, Penn, I think Penn can just sell Barstool again for probably a higher price and make a profit on the deal as a media company.
Look at JC getting all fundamental on us.
No, that's
see that. See a little.
I've been reading Barstool. I've been reading Barstool for 20 years. So
I'm not saying you shouldn't read it. I'm just saying in this era, he's a media business, and they never built the product. They can't compete with MGM Bets and DraftKings and FanDuel. Right? His big mouth isn't enough to carry a product. You have to build product to come back. And so I think you'll see a lot of spin. I think, JC, you may be right. They may have to spin that off because it's poisonous to the rest of their business. So interesting point there. So what I really am saying is we could be in a bull market, and we are in a bull market, actually. And I'm kind of bullish medium term and long term again, finally. But it's not going to be all things for all people anymore, right? Like, you can't just go bet on any gambling site and make money. So there's the haves and have-nots. Any more charts, JC? I thought the small caps were interesting, or what? Any more that you look interesting to you?
Do I have any more charts? Who Perlman? Who's this guy talking to?
Well, what do you like?
Dude, it's charts for days. Dude. Charts for days. Isn't that?
Are you kidding me? Do I have charts? We could be here all night. You understand, right? We could do this all night. Like, what do you want? I mean, come on. What do you want to do? What do you want to talk about? You want to talk about? You want to talk about what's important?
Yeah.
Let me tell you about what's important.
Is the XLF green for the year? Is that what's going on?
The XLF, is it green for the year? That's a good question. Let's see.
XLF is green for the year.
No, it is. It is green. Year to date, it's green. Year to date, it's green.
YTD. Yes. Yeah, look at that.
Yeah.
Who would have thought? I thought it was it was a global banking crisis too, part two.
Dude, the only crisis is in the portfolio of the perma bears. You know what I'm saying? Like, these guys are telling me about banking crisis and yield curves, and like, what are you guys even talking about? The worst thing, you want to know the worst thing? And I'm convinced that it has to be malicious, because these people can't be that dumb. Like, seriously, these are like very intelligent people that took third grade math, and they're telling their audiences that there's only 5 stocks going up. There's only 7 stocks going up. The S&P 493. S&P 493? What kind of fucking serial killer thinks like that, Perlman? Like, what are you talking about?
This is the distinction between intelligence and wisdom, because there's so many smart idiots out there just, being too smart for their own good over and over and over again. And meanwhile, you're just talking about very simple wisdom.
Why can't you just count? Be like, if you took 2 seconds to just count how many are going up, you will hit that 5 and 10 mark very quickly, actually. And you'll keep going for many hours, right? There's literally thousands of stocks have been ripping all year all over the world.
Look at Kathy McWoods. Her financial laughing stock that everybody's spending time on, including me, is breaking out. Her silly fintech ETF, ARC-F. So there are stocks moving. Even Square is having a moment. PayPal's starting to bottom. Listen, while we ridicule things, ridicule is good because it helps form bottoms, right? And that's just part of the process. We all have fun ridiculing, or we all have fun promoting. But in the end, prices are what matter, and prices have been bottoming. Even for the people that we ridiculed the most. So there's a lot of stuff going on under the hood. There's PayPal. And at the same time, MasterCard's, I think, at all-time highs. So it's like, PayPal is the laggard, but I think MasterCard is basically ripping at all-time highs. And I think there was some famous people, the name would be Chamath, that said get long Affirm and short MasterCard a year ago. And it's okay to be wrong occasionally, but he double dipped wrong on that one. So I think fintech is bottoming because people have given up. But the old financials, as you guys are saying, are participating and stronger than ever. And then I would also look, guys, at what was I going to tell you that was interesting to me? In medical, look at iSurge. We talked about iSurge. There's a company that nobody talks about. They make fucking robotics to do surgery, and they're back at all-time highs. So this is much broader than people think.
So I like how you call it iSurge. I like how you call it iSurge, by the way.
Well, isn't that what it is? iSurgical, ISRG.
Yeah, intuitive surgical.
Yeah. So look at that.
I got a question for you, Howie. So what are there any public companies that focus on fintech infrastructure that are like building out the guts for banks? And the reason why I ask this is because a lot of these banks, I just looked it up the other day, over 40% of banks in the US are still running on COBOL language. Like this is like a 70-year-old computer language. And these banks are old. And I remember it from my days in banking. And I was just last week talking to a buddy of mine, a good friend that I hadn't talked to in a while, who's a CTO at a bank. I'm not going to mention any names of the bank, but and we were joking about it. And I was saying, like, if everything is going AI and there's going to be this like rush into everything, all these other businesses besides just Google and ChatGPT or whatever, OpenAI, getting AI-ified, then the banks are going to do it. And the upside for the banks is incredible, as we have been talking about over the course of weeks. So I'm just curious if there's a company, if there's plays out there that are like fintech infrastructure to help rebuild this underlying decrepit bank COBOL-based infrastructure that is 43% of banking in this country. I just looked up that number. I was boggled by it.
All right. Well, JC pulled up the two charts. These are the way, unfortunately, to play it if you're a public company is the old guys, and right, Chamath and Musk and all these guys would say to short these. And I'm not saying 20-year view they're not right, but they're not thinking like an institution that has to put financials that are actually public and can hold their trillions of dollars. So that's what you see going on right now.
Not only that, the bank's got a lot of financial levers to pull.
And if you live in America,
crafty and as smart as ever when it comes to financial.
You got to understand where most people are investing is in America. Forgetting China for the second, but America, right? That's where markets are most liquid. And if you live in America, Visa, MasterCard, JP Morgan, it's fun to hate on them, but they work, right? I'm not complaining about Visa and MasterCard. I got a chip. It works. I hate Wells Fargo, but it's up to me to switch. So there's tons of switch. I think most of the interesting stuff, Phil, is waiting on Stripe. If Stripe can't get public, then what is the matter? Why is Stripe not public? So until Stripe is public, no. And then the two that I would follow that are Stripe-like, and I'm long DLO at the moment, and I'm looking at Adyen, pull up DLO, which is infrastructure LATAM kind of banking play. Been absolutely decimated, right?
dLocal Limited?
Yeah, dLocal. So here's where you want to know how bad fintech is done, Phil. Take a look at dLocal.
It's unbelievable how badly they've underdelivered.
Okay, so here's dLocal, which might be bottoming finally, and I'm long. But again, this is very, very speculative because it's still a young public company. But if you wanted to speculate, this is kind of like Stripe of LATAM. And then the other one is Adyen, A-D-Y-E-Y, which is a Stripe of Europe. So there are public plays if you want to speculate. But these two charts will show you how bad fintech is. But there is a sign of life because you can look at ARK FinTech and see that even Kathy Woods, she may be highly leveraged to Coinbase in that. But until Stripe gets public and people can start pricing in the public markets the true leader. But in the private markets, there's tons. There's Plaid, there's Alpaca, which I'm an investor in. But again, the margins are so terrible and the scale you need is so big, Phil, that I think you're better off focusing on growth in other areas. But those hopefully will help. Does that help you?
That was a great answer. And it was off the cuff. We didn't plan that. I think another winner here could be, and I hate to say it, hold my nose and say it, but I think JPM, they're going to do the infrastructure right. And they could just get further and further ahead of all of their competition because they are not holding on and trying to cut costs on the back end the way that the banking system has done forever.
Walmart too. Walmart's a bank of most of America too, right? And they're
Great point. And they're making all-time highs too.
So again, like if you want to own financials, you can own JP Morgan more, and kind of compete with the markets. If you want to outperform the markets, I think, Phil, your question is great. There's just, you got to manage your money because DLO and Adyen are going to be, those are my speculative plays because if Stripe gets public, they're going to start moving with Stripe. So those are my two favorite spec plays in fintech. PayPal, I guess, would be a third, but that is not where the strength is. So hopefully that helps. JC, one more. Let's do one more. Then I got to hop.
What do you want to talk about? What do you want? One more chart? Any chart I want?
Yeah, you pick.
What's the greatest chart in the world? What was that line we were using the other week?
Yeah, the most interesting. No, you're right. Let's end with the most interesting chart of the world. We had Facebook, which got above 300 JC, so not shortable. We talked about Bitcoin, and we're still right around that. Yeah, 30.
This one is for me. I actually have had some pretty aggressive. I had the best trading day of my entire life yesterday, by the way.
A lot of people did. A lot of people
best day of my entire life. So I don't like the action over, with all of that news. I'm fading the hype. I am all out of anything I own that's in Bitcoin. I'm out of all things. I'm totally out. I am going to wait patiently. This is something I've learned the hard way over the years. I'm going to wait patiently. I'm going to take my money and I'm just going to sit tight. And if and when the market proves that it can hold above 31, I'm going to put on some size again. But I'm good.
I don't disagree with you. I was selling some Coinbase. I remember we talked about 190. I was selling a 90 at 100. I don't care if it goes to 200. I'm bullish medium term, but there's going to have to be some follow through now because we've come very far, very fast. And yeah, Bitcoin not being able to hold 31, it's a third or fourth attempt. I think you need to be a little bit careful. All right,
Mara, so my target was 20 on Mara, and it just hit it this morning or got close to it. So what are we even doing, right? Mission accomplished. I think I was overthinking it because I was thinking about how impressed I was that MicroStrategy and Coinbase and Mara and Riot were absolutely ripping without Bitcoin breaking out yet. So I was kind of impressed by that. But I think I'm going to feed the ducks. Listen, I could be back in on Monday, Tuesday. I have no idea. 3 months from now, maybe. I have no idea. But if we're below 31, I'm out.
All right. So that's a big change. And I like to call that. I agree with you. I didn't like the trade the first time around because it felt chasey. But that's what trading is. You can only get the data that you get, and you're adjusting your opinion. So I don't have a most interesting chart. I still think it's the degenerate versus the rich economy, Phil, and I don't have a fresh look at that. I think the fact that JP Morgan, Walmart are back at all-time highs and the industrial, I just think it's just the most interesting thing is the fact that the market is doing as well as it is, despite how much the media says the end of the world is here.
Even look at CryptoPunks. CryptoPunks are back above 100,000.
Yeah, and Solana. If we could pull up a chart of Solana, JC, that was like the top shit coin. You had Sam Bankman-Fried. You had there's construction on my house, so I'm going to hop. There's Sam Bankman-Fried. You had no Dogecoin, please, but let's go pull Solana, which hasn't had news, which has just had everything going against it, from Sam Bankman-Fried to Gensler calling it a shitcoin. And it's remember we had this thing about Coinbase. It's trading strongly above when Gensler came in and laid the hammer on these things. So again, it's a mess technically, but I mean, above 23, 24, 25, this is supposed to be zero, to be honest. And much like Bitcoin, it isn't. So I find that fascinating in the crypto space. But again, it's not the most interesting chart in the world. I think the most interesting thing going on, Phil and JC, is that Gensler overplayed his hand. A lot of people this year are overplaying their hand, including Elon Musk. And it's interesting to see, like with Musk overplaying his hand, is Facebook a threat? Having used Threads, guys, let's end on this. I have no idea how to think about it. I just, it's interesting, but I'm not excited about it. What do you think?
Well, I want to know what your beef is with Dogecoin. What's wrong with Dogecoin?
Nothing. I just think, the guy behind it is just spammy and promotional, and I don't trust him. So,
I mean, it's the 9th largest cryptocurrency. It's $10 billion almost. It's not nothing.
Amazing. Not zero. I agree. Not zero. That's the most interesting thing about it, is it's not zero. And
if it's above 55, I mean, as degen as it might be to say it, if Doge is above 55 cents, I mean, I won't say no. I mean, I don't own it, but I wouldn't be like, don't do that. The risk reward, think about it like this. If 55 cents is your risk, or is your line in the sand, and you are disciplined enough that if it breaks 55 cents, all bets are off. If you want to own it. I got no problem with that.
I think Doge is to Elon Musk as Oxy Petroleum is to Warren Buffett.
Well, here's a question for you, JC.
Sure.
If I cover the ticker and look at the chart, does it matter what the asset is in the universe? Is there any difference between any asset in the universe?
Yes and no.
At
so
all
hold
times
on.
In any way whatsoever.
So yes and no. No. I don't. I'll still have the same opinion, but it is helpful to know that this is a cryptocurrency, so I can understand what the other cryptocurrencies are doing and would increase the probabilities. It's more information. So like, I would want to know that it's an energy stock. I would want to know that it's I just want to know what industry group it's in, and the market cap helps, and that's it.
That's the right answer.
Got it.
So I agree with JC.
Matters, but the asset doesn't.
Context completely matters here. Look at Solana, look at Dogecoin. I didn't know it was 9th biggest cryptocurrency. Knowing that, I give it more cred. As much fun as we want to make about it. If it's the 9th biggest and is held as the 9th biggest, there's a whole math. But that and Solana trading where they are based on where Gensler was and based on...
So Solana is slightly larger. Solana is about $1 billion larger, $1.1 billion larger. And Solana is the 8th largest.
Yeah. So Dogecoin below 55 and Solana below 15. We got a next phase of hell coming to crypto, or at least the shit coins. So it still remains such an interesting thing because of everything going on in the world. All right. I'm going to hop, boys. At least we got the show off. What do you think of Threads? What do you think of Threads?
I see it's done. Nobody's using it.
I haven't signed up. I don't know.
I don't think you need to.
I think it'll be around. I think it'll be around. I think it'll stay around. I haven't used it. I'm going to sign up.
Engagement's down 50%.
Right, but it that's like it had an impulse. At the beginning.
I'm a trend follower. I'm a trend follower. Is all I'm saying. I'm seeing fewer people using it. I don't know what to tell you. And the product sucks. So there's that also.
I think the product sucks. I think it just goes to show you, and maybe Elon's the master marketer, and he did this to prove it again that Twitter has dominance. Like, I'll take on Zuckerberg, and again, he's playing at a very meta level, and it's fun to make fun of him, but the guy is playing so many levels of mind games that you never know. He could be sucking Zuckerberg into wasting time on this. Zuckerberg is not going to tweet. If he didn't tweet in 15 years, he's not going to tweet because it's a Facebook product. And I don't think he has anything interesting to say. So I don't really give a shit about Zuckerberg. What I do give a shit about is keeping Twitter a great product, because I've invested so much time and we have so many friends on there that we just want to be left alone and enjoy the product. And that's what the kerplunk is. Like, we don't want to have our playing field mucked up. And I think that's
the community and the network really is the thing. And it's been that way since day one. I mean, we have friends going back 15 years now.
Correct.
From social media. It's unbelievable.
It's weird that I'm rooting against Musk for Twitter, right? Because I want to not have it's like having a home field advantage. I don't want to see my city fucked up, and when I see Twitter getting fucked up, I have 900 friends there that I like to follow. I don't want to. I don't want to have to chase them around to Facebook and make all kinds of new friends. So interesting. All right, boys. I'm gonna have to hop.
By the way, this is going to be the highest weekly close for the S&P 500 futures, weekly futures since January of 2022.
I think our track record's been pretty good. I think we've been doing this 4 months and we haven't been bearish. So that's just good. We're giving people.
I'm a little cautious up here short term. I'm feeding the ducks. I've had a nice run.
We traversed the regional bank scare too, and stayed pretty bullish through that too. So
yeah, I was looking at my fun account, Robinhood account, and any trades I've done. I was the biggest seller of the last 2 days that I've been in months. So
Robinhood showing some interesting strength here to close out the week. By the way, Robinhood.
Like I said, it's an interesting story again, but I haven't sold any Robinhood that I had bought, but I definitely sold down some Coinbase and other.
One more thing I wanted to mention: this far into a bull market, we continue to see correlations falling. That is a characteristic of a healthy market environment. So what that means is, for the average, for normal investors, is that with correlations falling, it's not, oh, the market's up today, so everything's up. Oh, the market's down today, so everything's down. It's not that at all. It's actually the opposite. There are winners and losers. So when they say it's a stock picker's market, this is what they're talking about. It's a stock picker's market. In 2021 and first half of 2022, it was not a stock picker's market. It was, you're either long stocks or you're not. And in this environment, the correlations have literally been collapsing on a rolling 3-month, 6-month, 12-month basis, literally collapsing since last fall. Again, that's a healthy sign for the market. That happens in bull markets. Just understand what that means for investors. There's going to be winners and losers. There's going to be longs and shorts. That's the market environment we're in.
This is the last 2 months I've participated in social around StockTwits and finance, sharing ideas in a while because of that correlation. There's just something for everybody right now, which is you have to both feed the ducks, buy the dips. There's short ideas out there, but generally I don't short, but there's a lot of stuff that can work because, as you said, and the correlations just are in a good spot.
Yeah.
Quick plug for StockTwits, by the way, really quick. The new trending streams on StockTwits are really cool. You click on it and it sort of gives you the most prominent messages from that stream. I know that's something they've been implementing for quite a while there to get that down. It's great because you go there, you hit it, the first 5, 6, 10 messages you see on a stream are awesome and have a lot of engagement. Secondly, during a period like this where we're seeing a shift in sentiment from, bearishness to FOMO, if that's what we're seeing right now, if we're right in the middle of that, going to StockTwits and seeing the sentiment on the stream is just nothing better than that. I mean, I've been watching so much bearishness on the QQQ stream for like a while, and now it's like, yes, it's still there, but you can see these people writhing in pain.
I will also say that it's what you do either on Twitter or StockTwits, but on StockTwits I know how to read it. I just very trust my own feed that I've built up, and we all have our different places for sentiment. But as I told people on Twitter and StockTwits 3 months ago, when the U.S. when Circle's stablecoin broke and it trended on StockTwits, there's been a few moments on StockTwits where massive things happen. The first one was in 2017-18 when Bitcoin started to have more message volume than the S&P. Okay, and I said, we can make fun of this, but Bitcoin's not going away. Okay, we had one of the biggest crypto signals that I've seen in a long time. Since that point, when U.S. Stablecoin on StockTwits, right? We're not Reddit, we're not Twitter, we're StockTwits. We're a little bit slower than the rest, right? So the signal isn't as good, but when it happens, I think it's very interesting because we're the next 500,000 people that come into the market. And so when stablecoin broke and was trending on when the U.S. Circle, I said that is, and it gained back parity. Sorry guys, they're drunk, and it gained back to parity. I felt like that, and that was about 3 months ago, that crypto kind of was we've seen the next phase of crypto because we need a stable coin. And I think what's going to come out next is some kind of US dollar backed stable coin. So I think medium and long term, again, it's hard to be bearish on crypto. But I think what JC said earlier is like, I was willing to mortgage a house above 31,000, but that's short-term thinking, not short-term thinking. He wanted to think long-term, but you have to be willing to re-enter and enter that because there could be a 20, 30% pullback before another move sticks. And, but I do think medium and long-term, there's so many things happening that didn't look like they would happen a year ago. And they're all somewhat resolving bullishly in price for crypto and sentiment. So it's something.
Think about it like this. 4 weeks in a row, that Bitcoin fails to hold above 31. Tried 4 consecutive weeks. It's just a lot of frustration. Again, I had a good run. I'm going to wait to see it. I'll pay more. You know what I'm saying? It's a luxury. Think of it as a luxury. When you could stay at a shitty hotel or you could stay at a nice hotel and you're going to pay more for the nice hotel with the spa and the nice pool and the drinks with umbrellas in it, or you could stay at the cheaper place and then you're going to pay the consequences of staying at the cheaper place. You can front run the breakout and suffer the consequences of the volatility, maybe a 30% correction. Maybe it does break out tomorrow. I have no idea. Or you could pay a premium to know that we're above 31. It's going to be less of an aggravation, and you're going to pay for that. I think of it like that.
Fundamentally, a few things have changed this week, meaning shit coins are not going away. And people will take their money out of Bitcoin and spread it over shit coins. So remember, supply demand wise, Bitcoin kind of had negative news because all the positive news is out. Larry Fink likes it. ETFs are coming. But now the shit coins are generally accepted, or we're winning some, people are winning some of their cases. Money can flow out of Bitcoin into the other currencies. So interesting. All right, I got to hop, boys. Have a great week.
Adios.
See you, everybody.
Adios.